Good evening, you're watching Stock Watch with me, Zinati Kuma, and joining me to unpack your stock-related questions tonight are Ricus Reeders from PSG Hole in Ruimsig and Simon Brown from JustOne Lap. Be sure to send those questions via SMS to 41392, email at stockwatch@bdtv.co.za or tweet us at BusinessDayTV using the hashtag StockWatch. Gents, I'll go straight into the questions. I'm so tired of talking about the Fed and interest rate cuts and how next week's Fed meeting could be a non-event. So let's get straight to the questions. There's a question here on the panel's view on MTN. I want to start off with you, Simon. It's been quite an interesting year of those telecom stocks actually under pressure, particularly MTN and Vodacom. Telkom just had a recent bounce now with some of the announcements that they came with. But MTN specifically, what is your view on that stock?
Yeah, being a telco has been tough this year, pretty much across the board. MTN's got two big problems really. South Africa, which is its second largest market, they've got power issues, and they can resolve that by keeping towers going. That comes at a cost. Nigeria, which is their biggest market, we saw the devaluation of the naira back in mid-year, saw it lose some 45%, and that's just significantly dented any profit that they'd hoped to get out. In truth, they took shares instead of cash on the one dividend. It's a really tough space, and at this point, with a consumer who's squeezing and huge competition left, right, and centre, I'm not generally a huge fan of the telcos at all. Their competitive edge, they talk around it's going to be banking, financial services, but literally everyone does that these days. Your local grocer has got some level of offering there as well. So I don't much like the telcos at all.
It's actually quite interesting because, I mean, MTN is seen as this, the more volatile, one of the more volatile of the telecom stocks. But obviously we know the volatility that Telkom has gone through as well. But MTN is, is seen as that counter where when it is high, then you get these really great benefits. But I feel like this year has been, it's had a longer period of pressure in that share price. So Ricus, what do you make of MTN at this point?
Okay, so the PSG house view is that it's a buy. It's not necessarily my view. Obviously, the house view is based on the fact that the share price more than discounts all the bad news that Simon's been talking about. Okay. Which might very well be, but I don't like in buying stuff which is going down. And I've got a technical target price of about 75, 80 rand on. Not saying it's going to go there, but I mean, it can. So until such time as the trend starts coinciding with, positive fundamentals, I really am not interested in it. Yeah.
All right. I hear you on that. Sasol, talking about stocks that are seen as cheap. COVID aside, the last time Sasol was at these levels was 2005. Is there any hope for the share price? Okay, let's start off with that. Is there any hope for the share price at this point, Simon?
Sorry, coming to me.
Yes.
So I held Sasol for a very long time, and then finally I sold it, and I slept better for it. It's a tough stock. And to Ricus's point, things that are falling should best be left to fall. And in Sasol's case, I'm looking at just weekly red candles, I don't know, half a dozen or more of them in a row. They've got challenges. The first point is, I mean, the rand and the oil price. Okay, oil's under bit of pressure at the moment, but even when oil was at 80 or into the 90 and the rand was sort of 18.50, Sasol hasn't been responding. The market's worried about their secunda, the costs in terms of environmental there, and that's what's really spooking the market at the moment, and largely ignoring oil price. And it's not a chart that I would want to stand in front of at this point.
And that's the thing, because I mean, they've even branched, not into chemicals as well. So it's not just an oil price stock, and I kind of also get why there isn't much of a correlation between it and oil. Ricus, does this diversification not bode well for them, or is it adding to the pressures?
Well, I was on this show a couple of days ago, and I said my price target on Sasol was 185, and got that today. So it gives you an idea of the negative momentum in that price at the moment. Yeah, the diversification should help, but then the industry you are diversifying into should have a positive outlook, and that's not happening either as far as the chemical business is concerned. As I mentioned, a few days ago, headwinds in specifically Germany, in a generally poor chemicals market, which is a direct result of slowing world economic growth. So it's headwinds all the way at the moment, and until such time as that turns around, I can't see the price of Sasol turning around.
Yeah. I mean, the second part of the question is it a buy for the long term? I guess both of you are saying no. But also, do you avoid it like the plague, Simon?
Yeah, it's just the thing with Sasol. It's so very deeply cyclical. Oil is something that moves around a heck of a lot. Oil is volatile as it is. You then take the operational aspect onto it, and this is a stock that has been 600 Rand or there's about at points in time. And it's a stock which 20 odd years ago you could probably have picked up for 20 Rand. Along the way, it just has been everywhere. It's very much a trading stock, and it's worked well as a trading stock, particularly relative to the oil price. That has worked at times. At the moment, too much also is weighing on the market's mind, and it's lost that correlation towards an oil price. At some point it'll bottom, and then they're great to trade. We saw what happened with Kumba this year, Kumba Iron Ore. But at this point, it needs something to turn positive in its favor.
All right. Well, let's go on to Remgro. I'd like the panel's thoughts on Remgro and whether they think that the share is worth holding for the future or whether to exit at these levels. The share seems to have remained stagnant. And is it worth exiting or investing somewhere else? Of course, that opportunity cost is always something significant to ask yourself as well. Remgro at this point, which only holds unlisted companies, if I'm correct at this point. With the share price remaining stagnant, Ricus, would you say that you should hold or just leave the stock?
Yeah, I think you touched on the interesting point there, where Remgro is moving away from holding listed assets into unlisted assets. So that comes down to two things: new trust management to execute well as far as the investment in their unlisted stuff is concerned, and secondly, do you think it's worth holding companies at all? And certainly the market perception at the moment for holding companies of assets, whether they be listed or not listed, is unfavorable. I think that considering their track record, it's probably not a bad anchor in your portfolio. Just don't expect any sort of fireworks unless one of those unlisted entities, they get it spectacularly right. So I would tend to hold it just because at least management is actively doing something. They're not just sitting on some stuff and taking a management fee, if I can put it that way.
Yeah, and I mean, for the last, year, 2 years, of course, these investment holding companies have been under the spotlight for that heavy discount on the NAV there. Simon, would you say that they are maybe one of the few that have managed to get things right?
Yeah, I think, and the discount to NAV issue, a lot of folks think that those were closed. I think Ricus Reeders alluded to there's been a shift in mindset around holdcos, and what used to be a 15 to 20% discount is now oftentimes 30 or 40, and that is extreme, but that's where the market wants to price it. In this case, yeah, you've got a good management team, and they've done really, really good deals over the many, many years. So you're backing them, as Ricus says. You're not not going to get spectacular returns unless they strike it lucky on something, and certainly they're possible too. I like them as a concept, as a core portfolio, particularly when they start to move to more unlisted, so it's assets I wouldn't normally be able to invest in, and it's almost a quasi, it's not a private equity because they're long-term holders, but in that sense, and with management expertise.
All right. There's a very interesting one today. Can I ask your panel why the SA banks sunk today? All our banks were down, and I could not find a reason why. Ricus, did you pick up anything? I actually spoke to someone earlier on, and they alluded to the Consumer Confidence Index that FNB and BR came out with. That was at -17. I think that was the lowest festive season reading ever, or in a while. I can't remember. Could that be it, or was there something else, Ricus?
Well, that's about the only reason I can think. I mean, the banking sector, yeah. I mean, FirstRand, Standard Bank, all of them. A huge turn for the worse today. Obviously, we had some rand volatility, which might affect it as well. But it looks like consumer confidence. Nedbank had a trading update, which I didn't think was particularly bad or good. So the vagaries of the market are, as far as I can see.
Yeah. I mean, these banks have had quite a good year, last few years, in fact. Simon, would you say that maybe this would be the time to kind of take some profit, or is this an opportunity to get into a really good sector that still has a lot of runway to go in terms of growth?
I think, I mean, the banks certainly have been running. They're not yet back at all-time highs, but I'm looking at the FINI 15 index. It's back where it was after that massive run-up post the pandemic into 2022. What we're seeing with banks is, and it's different. Standard Bank's update their impairments, bad debts coming in at 1%. Nedbank a little bit higher than that. Still making good profits from the Jaws effect, getting some CIB work. They're operating in a tough space because it's an economy that isn't growing. So there's no sort of GDP growth to work a base off. But some operating well in other markets, and by and large not expensive. Capitec, the sort of 4 times book, FirstRand 2 times, and the others 1 and even under 1. So PEs in the high single digits, and in some cases, dividend yields not far behind. That said, do we start to see bad debts coming? There's a lag effect to the interest rates. You know, how much is that going to impact into 2024? My sense is the banks have provisioned well and they've lent well during the pandemic. So I don't think we're going to get massively out of cycle bad impairments, and then they still look cheap.
Even Capitec, because even Capitec actually was seen as the one that was really expensive that investors were getting out of. Are we starting to kind of see a redirection in that, Ricus, with Capitec, where they're actually at levels where you can actually nibble on the stock?
Yeah, it's not, you know, by virtue of its history with PSG, it's not something that I've followed over the past number of years. So unfortunately, I tend to concentrate on the 4 big ones. Maybe Simon can help me out.
Yeah, Simon, just one last thing to add there.
Yeah, I mean, Capitec is and it's having a really good run now, and from, you know, it could potentially go past 2,000 into maybe even 2,200, just on what looks like some decent momentum forming there. The problem with Capitec is that they are the expensive bank. They have 4 times book. FirstRand is 2, the rest 1. It's very expensive for a bank that's now kind of doing growth levels that are in line with the big 4. So, you know, what warrants it a premium? You could argue a lot. Certainly there's an argument for FirstRand, but I'm not sure at that level of premium. I think, and I've held Capitec for a decade and a half or more, but I've recently taken profits and thought it's a very expensive bank that's now just a bank.
All right. More questions, gents. It's going to commodities. Sibanye for the medium term. Ricus, let's start with you.
Yeah, well, nobody's spoken on this program about Sibanye for a very long time. I'm joking. It seems to be the perennial question. The answer to me remains the same. In the right kind of circumstance, they will do well. They've had a big capital spend. They've made some bets on alternative energy. probably will work out in the long term, but at the moment, I won't say they're under financial. Well, they are under financial stress, and they need higher prices, and they need less accidents and less unfortunate events, whether it be flooding in America or whatever. So, if one takes a look at resources, they're all for trading. I think the safer bet at the moment is probably a more diversified miners. You've got to be very sure of yourself if you go to a specific commodity. Instant miners go to platinum, and obviously a little bit of their future mineral, but not for at the moment.
I mean, besides BHP and Glencore and Anglo, the parent, Sibanye is, I would say, is one of the favorites that I've heard on the show. Simon, your take on Sibanye?
Cool. The Sibanye story is a great one. Their long-term assets that they hold, which come with risk, as do all long-term mining assets, are really, really good and moving them in the right direction. Right now, their problem is PGM prices, which are just being smashed. Palladium down in the low 900s early this morning. I mean, it's a crazy price. Rhodium, back at a couple of thousand, down from 30-odd thousand previous. So that really, really hurts. They've got some gold. Everyone's like, look at gold, all-time highs. But they're higher up the gold cost curve. The equity, the bond issue, which convertible to equity, just as Ricus said, I mean, they needed some cash, and that was a deal done at almost the worst possible time. It's a stock that's got potential. It's not a stock I would be buying even at these levels. It's a falling knife. A lot of stuff needs to go right. And when it does, it'll start to respond. And there's time. There's no need to try getting ahead of it. When PGM start moving, they start becoming profitable. There'll be plenty of time to pick up the likes of Sibanye.
Well, would you be picking up Zeda at the moment? As we saw, I think after the full year results that they announced, we did see investors going into the stock. It's festive season right now, but also some of their other, like the leasing business, seems to be doing well, and there's some debt movements that they've made there to improve that picture. Ricus, Zeda, in or out?
I'll be in. What's strange in the company is their financial gearing. They paid off debt. That wasn't expected. That's changed the income outlook. So I'll be quite comfortable.
Yeah. Simon, Zeda for the medium term?
Yeah, it's going to be my pick this evening, and I can talk more of it later or now if you want. But certainly for me, I think it's an interesting stock, and it's got some good drivers behind it.
All right. We'll be getting more of your thoughts on that later. There is a question here. Would you rather buy Bidvest or Bidcorp? Ricus.
It's really almost two different entities. Bidcorp basically centered in Europe as far as their services concerned, whether basically food delivery, and Bidvest is the elephant in South Africa, sort of the same kind of business services, not necessarily food, obviously. I would tend to have both. Again, Bidcorp for Europe, where things I think have turned out a little bit better than I expected as far as growth is concerned. Their inflation is basically almost back to target levels. They might even be first in the road to start cutting interest rates, where everybody's expecting the Americans to do that, which should be good for equity markets and Bidcorp in general. Bidvest trading update wasn't well received, 10% down. I think it's 10% cheaper, and if you're even faintly positive on South Africa, you've got to be positive for Bidvest as well.
Yeah, quite a very, because that's also, you saying that Bidcorp has actually done better than you expected. I feel like that is the general sentiment in the market. And of course, Bidvest, after a long time of successes, now they... Simon, would you say with Bidvest, that was a blip or something to be concerned about, at least in the short to medium term?
I think there were a couple of moving parts there. I don't think it was something to worry about in the medium term. They'd come off a really stellar set of numbers, boosted a lot by renewable energy, and that then sort of gets into the base. The market was pricing them, I think, around a 15 PE at the time when the trading update came out, and you know it just got smashed as a result. At that point, was an expensive stock, and I think it maybe got in terms of the share price ahead of itself. I agree with Ricus. I think they're both well worth holding. Bidvest, the sort of 220, 230s is looking attractive. It is linked to the South African economy. It's where it's earning most of its, you know, where it operates and does its business. But it's a good operator. It can make a profit in this environment, notwithstanding how tough it is. Bidcorp, the trick with Bidcorp is you'll see, I think the results will be in December, so we'll see them late Feb for mid-year. Are they going to have a stumble as well in terms of Bidvest? Different economy, but when I spoke to them at the last set of results, they were talking how about they were sharpening the pencil on some of the contracts they were writing. You know, small hit to margin perhaps and the like to keep contracts, and that's absolutely perfectly fine. But if either of those go, we could see a slightly weaker update from Bidcorp.
All right. There is an interesting one here. My 2024 stock picks in no particular order are Tesla, Meta, ArcelorMittal, Transaction Capital, Sibanye-Stillwater, Pick n Pay, and SPAR. What do you think of these counters? PS, I'm aware many of these are a turnaround story. You don't have a lot of time. I think we have about a minute for each of you before your stock picks. But let's maybe kick Tesla and Meta platforms and really looking at all these other ones. They are all turnaround stories. You both earlier on spoke about why would you buy counters that are falling, but are there any turnaround stories there that you maybe have some slight optimism on? ArcelorMittal, Transaction Capital, we've already spoken about Sibanye-Stillwater, so maybe not that one. Pick n Pay and SPAR. Ricus?
Well, as far as the local ones are concerned, you know, I don't know how many counters there are, 6 about, okay. 2 of them are going to do extraordinarily well, and the other, you know, 4 or 3 are going to go down even more, basically because they are dogs, or all of the local ones. Yeah. You tend to get great outperformance out of a minority of them. Maybe they make up for further losses in the other. Tesla and Meta, I've got a subjective dislike for both of those companies, but I suppose Meta, considering their size, Tesla, I think, is overhyped.
All right. Simon, do you think that there are any turnaround stories there that are worth buying into? ArcelorMittal, Transaction Capital, Pick n Pay, SPAR?
So Pick n Pay and SPAR, I think you're a year early and rather wait your time. Transaction Capital is interesting. From a technical perspective, if we can get a nice weekly close sort of around about here, we've got a nice picture on the chart. And what we've got is a stock, let's ignore SA Taxi. We buy cars, 650 million profit. The Newton business, I think 430 million profit. On a 10 times PE, I mean, that's about 10 billion market cap. At the moment, Transaction Capital is 6.5 or 7. You've got a margin of safety there. You know, it's unlikely to all collapse in a heap again. The question is, can they start seeing profit? I think they can. I think SA Taxi can get to break even next year, perhaps, and then they'll make a small profit, and then they'll start paying a dividend down the line again. I think Transaction Capital is an interesting one.
All right. Well, sticking with you, Simon, you've already mentioned that your stock pick for today is Zeda. A quick one on that.
Yeah, so Zeda, they paid down their debt very nicely from the unbundling, so they're largely debt-free. There's been pressure on the share price. This happens with an unbundle. A lot of people get this company, Zeda, they don't know what it is, they don't want it, they sell it because it was never part of their portfolio. And we've seen that pressure flushing out through the year. Car hire is doing fairly well. Tourists are flocking with the weak currency. Election next year could help with a bit. And business, by all accounts, businesses are zooming less and flying and hiring more often. They talk about mobility as a service, which is sort of Uber meets Mr. Delivery and the like, or Airbnb. And it's interesting, but I think they're in a good spot, and I think they've got a good looking balance sheet, and they should make some good profits next year.
All right. Ricus, what are you looking at today?
Okay, market momentum in the very short term, for the next week, 2 weeks is down. So I expect my stock pick Atratec to maybe partake in the downwards momentum, but closed about a week ago, and the reasons remain the same. Consistent income growth, debt is going down, and I think the African operations are going to do well in the future, and the price is at an all-time high and heading higher.
All right. Well, thank you so much for your time and for your insights today, gents. I really, really appreciate the time. That's all for Stockwatch this evening. Thanks to our guests, Ricus Reeders from PSG Hole in Ruimsig and Simon Brown from JustOne Lap. Coming up next, the close. Stay with us.